Let's talk about Nvidia now, hitting a new record high today. BMO raising its price target to a new street high of $565. Reports earnings after the bell tomorrow. It's our call of the day. It is widely owned. Stephanie Link, you go first on Nvidia. Can it live up to this hype?
I just dislike it when analysts do this ahead of the quarter. The stock is up 107% year to date, and it trades at a crazy multiple, over 80 times earnings. But the reason why it's done so well is because it's a combination stock. It's a stay-at-home stock with exposure to AI and gaming, and it's also a reopen stock. Mellanox, the acquisition, will be very synergistic. That's all networking and storage. But also, they have been making a lot of progress in auto and signing up deals with Mercedes-Benz on connectivity in the car. That could be $100 per car on content for them. And then they've also signed Daimler and also with Bosch self-driving trucks. That could be a $2,000 per vehicle opportunity for them. So they're getting more recurring revenue. And so I understand why there's so much fondness for the stock, and all of us own it. But I do think the trends are their friend at this point. I don't want to get off. I'm just nervous as all get out because we could see a big pullback if they don't live up to the expectations. Might be a buying opportunity, though.
Okay, Josh, give me your take, and then Sarat, you go after Josh.
Yeah, I was looking at the stock this morning, and, you know, this is a stock that has never traded at a reasonable valuation. I use Y charts to look at this stuff, and even when I bought into the stock, it was trading at an elevated valuation relative to both the S&P as well as the semiconductor sector. So right now, it's like a 90 multiple. I would just say that that is way higher than its average multiple over the last 5 years, and it's probably discounting some situation where all of the things we've always been saying about the potential for their platform will all just magically materialize and happen. So I agree with Steph. The multiple is starting to get ridiculous. I don't want to let go of it because I still really feel they're going to be the most important semiconductor company in the next decade. But a lot of that is now already being priced in. I'm up 700-something% in 5 years with this name. And the higher it climbs on multiple expansion, the less happy I am about it. So I hate to sound a somber tone as the stock heads toward $500 a share, but that is the reality. We are really getting up there in valuation.
So, Sarat, that's up 40% in 3 months, yeah, to Josh's point. So Steph's a little nervous. You heard Josh's tone and his analysis there. What say you?
I am too. I mean, the expectations are so high, and everybody has jumped on this stock at this point. So it makes me wary as to what they're going to say. And really, to Josh's point, if they don't fire on every cylinder, you will see this. And historically, this is what happened to the stock. If you look at the chart, it does pull back after earnings when expectations are this high. So as a long-term holder, I would buy more, given the opportunity if it comes back, especially for new accounts and clients who are not exposed for it. So, but it is a core holding, and I think it's one you want to own for many years.
Core holding, which means you have no inclination whatsoever to take some profits at all. And
only
then,
when it get for an outsized position. So if it starts growing more than 4% of a portfolio, yes, it's a portfolio prudent move. But in terms of holding it for a long time, unless there's
Judge, the multiple here is up 150% just in the last year. So, like we talk about multiple expansion for Home Depot. Let's say the S&P is 25 times earnings, right? And we're saying Home Depot is 29 times earnings. All right, that makes sense to me. It's 20% premium to the overall market. Can anyone argue that Home Depot is not doing better than 20% of the market itself? In the case of 153% multiple growth over 12 months, I mean, the company didn't cure cancer. Like, they're doing really well in video games, and I think this quarter will be the first time that cloud and data center will eclipse video game sales, so and then, maybe that's something to cheer about.
So why not?
But, I mean,
what do you tell people, though? I mean, if not now, when? Like, when do you know it's time to say everything that you said is, you know what, I check that box, check that box, check that box. I got to sell this. I just have to take these profits because of everything that Josh just said. If not now, when?
It's a great question. Sarat has it right. This is a stock that all along the way, hundreds of percentage points to the upside, has given you multiple cardiac arrest moments. This is a stock that's fallen 15 to 20% after certain earnings reports. And there was a very notable one, I think, in the end of 2018 that scared everyone. And it had to do with cryptocurrency sales of GPUs being down.
Yes.
It was so irrelevant. Why? But the stock, I think, fell 40% on that one. So we've had these situations where the stock has gotten killed. And if you're a long-term shareholder and you believe in the vision of Jensen Huang and where these platforms are going for automotive and all of these things, then you just say to yourself, I'm going to have to put up with some really, really bad months with the stock at this elevated of a price. So to answer your question directly, when do you decide you're done? Let the company screw up. They haven't yet. Let Intel get serious about competing. They haven't yet. So that's kind of where I am with this.